Here we go. Welcome back to Stocks by the Numbers, and I wanted to do a quick update. I know I'm coming late, but it was a pretty decent call here on Draftkings Incorporated, ticker symbol DKNG, here on the NASDAQ. Sports betting company, they mentioned that the Super Bowl numbers were actually through the roof. And people, obviously, if we look at the actual earnings that came out, you can see the company technically missed on the top and bottom lines. However, we've spoken about, I know it was a pretty big miss on the EPS side, but we've spoken about also, even when looking at a company with the growth in revenue, right? Because this company recently had like 1.2 billion a quarter. Now you can see estimates jump up to 1.4. The company comes just below that, 1.39 and change, misses by about 4.3 million, or roughly a third of a percent, right? So this is what I mean when I speak about a company growing nicely. They bump up the estimates and the company comes just shy of it, but it's not always viewed as a huge negative. Now, of course, I will say that if the company didn't mention how big the Super Bowl was for them, how many users they had, then obviously the stock, chances are, either would have flattened out or dropped down. Because we also spoke about the potential run up that we could have seen going into earnings, which is basically what happened. And if we back up here, we mentioned coming up to about 44 and change here to this top level resistance. And then when we saw the company pop up again, we were talking about it in Discord. I think I may have tweeted that the stock is going to continue to run, and even going into earnings, we might see about 47. And you can see top left of the screen, stock hit a high of 47.10 and then pulled back. And then, of course, the info came out and the stock ran up to a new high of 53.61, which is why the last time, well, the last couple of times we were looking at DraftKings, we were speaking about the potential breakup above resistance and the fact that this stock will more than likely, sooner rather than later, potentially see that break up to between $50-$60 a share, right? That's what we were looking for. We spoke about the analysts being pretty bullish on DraftKings for the most part across the board. A lot of price targets in the mid to high 40s. Some people had, 51, 54, and of course they recently changed up some price targets. But let's get into what the company actually reported. Stock is flying. Article out of Barron's. Strong performance during the Super Bowl. Now, of course, again, the Super Bowl happened just this last weekend, and the earnings that were just released were for the previous 3 months, the previous quarter. So again, technically, these numbers weren't in the revenue that we just saw, but it's supposedly lining the company up for what could be a very nice earnings beat next quarter. And of course, as they mentioned here, they raised the guidance slightly through 2025. So that's why people are kind of just highlighting the positives and the fact that they're outweighing the slight miss or the wider than expected loss that the company just posted, because we're looking further past the horizon and we're looking for bigger and better things to come. So DraftKings reported a wider loss in the fourth quarter. Still, the shares climbed, surged after management raised midpoint 2025 revenue guidance, said that free cash flow was positive for the first time in the company's history, right? And we speak about this with a lot of these smaller up and coming stocks that we spoke about. And I know that something like DraftKings may be bringing in a little bit more revenue than something like a Fubo or a SoundHound. But when you look at the rate at which these stocks are growing, and then you start to see one, two, three fundamentals all of a sudden flipping from the red to the black, that's where the big pop happens, right? And again, good example was what we saw back in Palantir a while back. Was in that long-term descending wedge. Stock was like $7. They came out, they posted earnings, they beat, but what happened? They posted positive EPS. Everyone thought, I think, they were going to post like flat or a loss of 1 cent. Boom, the stock prematurely breaks up and out of that wedge, and of course the rest is history, and the company just continues climbing off of consistent positive catalysts, consistent contracts. But in a nutshell, again, the original point, anytime you have a fundamental metric that's able to flip from the red to the black, that is the huge positive that a lot of analysts, a lot of hedge funds may focus on. And that's why a lot of analysts as well came out and upped their price targets after this news hit. Quote, DraftKings is at the epicenter of a mega trend. Real money online gaming is a large and growing industry with secular tailwinds behind it. We believe we are well positioned to capture significant share, and we haven't even begun to expand outside the US and Canada, which we could explore as a longer term opportunity. again, we're seeing this type of growth, and we're talking not even all of North America, we're talking just US and Canada. So I definitely agree that if the company was to expand internationally overseas, whether it's throughout Europe, Asia, it's really not going to matter. It's just going to add more users, more revenue, more bets coming in, and obviously it should signal for further growth, in my opinion. Shares were up. We're on pace for the highest close since September 21. Super Bowl, largest football game of the year, took place on February 9th. This is an important game for peers, obviously Flutter as well. Users bet big. Said on earnings call, Super Bowl Sunday, customer acquisition was a bright spot as its sportsbook app reached number 1 in the App Store in the sports category and number 3 across all apps. Quote, Super Bowl delivers super results. Wow, well done. That was a Canaccord Genuity analyst. Increased price target from 54 to 60. Maintains buy rating. So again, most analysts were originally bullish. Now they're not only remaining bullish, but of course they're pumping up their price targets. Because if you had a $49, $50 price target, now the stock's at 53.5. You're going to have to increase that price more than likely to stay on the same side of the fence. Quote, Super Bowl Sunday drove robust engagement with DraftKings, setting a new daily record for sportsbook handle at $436 million. The $436 million handle refers to the amount that customers spent on placing bets. Because the Super Bowl took place in the current quarter, Wall Street will have to wait for next earnings report. Yes, that's true. For now, it looks like investors believe the big game was a big win. Yes, it does sound that way. DraftKings 3-year high, hot Super Bowl. But I wanted to get into... we had the guidance also. DraftKings also reported that its hold rate, or the cut of wagered money the sportsbook keeps after paying out winners, was 11% in January and 13% so far in February. So again, what that means is they're now getting a slightly larger piece of the pie from January to February based on how much money was actually bet. Which of course is a good sign because it means the company's making more money. Blockbuster performance during the Super Bowl, up from 9.4% in 24. Very nice. Quote, we're off to an excellent start, CFO said. Stock rose. Earnings revenue were shy. Sportsbook had a rough run in the last 3 months of 24 as more wins by favorites and fewer underdog upsets ate into their hold rates and forced them to pay out more winnings. Meh, it happens. There was some concern that those lower 2024 hold rates would prompt a cut to DraftKings 25 guidance, but that didn't happen. Conversely, it sounded like DraftKings is having better than expected success with structural hold. DraftKings now guiding for $6.3 billion to $6.6 billion in revenue, a $50 million lift at the midpoint from its previous guidance. So, usually for the most part, that's why people will focus on the future growth, the future earnings potential of a stock, and that's why if a company comes out and says, yeah, it was rough this time, it was rough this quarter for the last couple of months, but we're on track to beat estimates down the road, and you know what, we're even upping our guidance. We think we're going to do better than we initially anticipated. That's why those stocks will usually see a nice big bump, even if the numbers came in red. And of course, if you're an options trader and you bought puts and you see red, you see a miss, but then the stock pops up. Believe me, I understand your frustration, but unfortunately, it is part of the game. DraftKings reached top spot. Guidance raise, okay. Company, yes, recently acquired Simple Bet. Provides in-game wager pricing information for sports leagues with the goal of improving DraftKings live betting capabilities. The addition should increase DraftKings hold rate and the mix of parlay bets it takes. So, all in all, again, technically a miss, but as we're saying, projecting positive free cash flow, we're increasing guidance, and of course, analysts jumping on board that good news. You can see benchmark raised price target to 51 from 44. Technically, obviously, the stock is above that, but it's good news that they upped their price target at least. DraftKings up. Yeah, it went on a nice run, up 8 of the last 9 days going into this earnings. And it's funny, too, because I know, and again, we can't really fault them because I know some people were looking at the run-up to that resistance trend line, and, a couple of people left comments, and they were like, oh, yeah, it's 45, it's 46, I think it's going to pull back, going into earnings, coming out of earnings, And again, technically, the specific earnings report may have justified that pullback that they were looking for. But again, the company comes out and says, yeah, it was a rough quarter, but by the way, next year is going to be phenomenal. It's hard to keep a stock like that down. Could potentially be viewed as overvalued in the numbers here now after this recent run up. So you might see the pullback back to mid 40s or even lower 40s, believe it or not, back to one of those trend lines, retest it, calm it down, pull it back. RSI seems pretty high, of course. So, if you did miss this pop, you might still be able to step in and grab some shares of this company, maybe at a nice 10-15% discount from these prices. But I have a feeling they might want to bring it up before they bring it back down. So, if you want to jump in and ride the end of the wave, if you will, that's entirely your own prerogative. But of course, you can hang out for a little bit, be patient. JMP Securities maintain $50 price target. See, they're just playing it safe now, in my opinion. $50 million guidance. Yep. DraftKings maintained buy. Canaccord Genuity. Price target raised from 54 to 60. Earnings up on a miss. Here's the 10K. Total revenue, 4.767 billion, technically, right? They put it in thousands of millions. 30% increase from 2023. Look at that. I mean, again, phenomenal growth, right? Phenomenal growth. But we know that sometimes in the immediate short term, they beat some of these companies up. Again, perfect example. AMD, right? We spoke about what? 68, 69% growth. Oh, it's a little less than what we were looking for. It's like, maybe you're being a little bit of a greedy bastard over there, right? Because who the hell could really put their nose up at 69% growth? But anyway, DraftKings, 30% increase from 2023 is phenomenal. Gross profit about 1.8 billion. Improvements, okay. Loss from operations about 609 million. 22.8% improvement. Beautiful. Cost management, increased revenue helping them out. Net loss of about $500 million, 36.8% improvement from 23. Loss per share, $1.05 from $1.73. So that's what I mean. Again, a lot of these metrics are moving in the right direction. And usually, unless the company has immense overhead expenses, then usually the recipe is, if a company continues to expand its market share, expand its footprint, bring in more and more users, generate more and more revenue, they're going to, for themselves, take a larger piece of the pie, which will be able to compensate for all expenses and leave a little extra left over. And the more we see that, or even the closer a company gets to that point, that's when Wall Street rewards them. Yeah, we got all the segments. Simple bet. DraftKings implemented a stock repurchase program authorized by its board, allowing for the repurchase of up to $1 billion of its Class A common stock. In December, the company repurchased about 1.1 million shares, average price of 42. Issued convertible senior notes in 21. They mature in 28. New revolving credit facility up to $500 million. Optimizing cap structure, enhancing shareholder value. We continue to expand. Okay, beautiful. I just wanted to just go through some of these recent articles because I just wanted to see if, I just didn't want to miss anything they mentioned about any share repurchases or exactly what they were guiding for the year. I wanted to look. Here we go. Saw a significant increase in monthly unique payers, which rose to 4.8 million in the fourth quarter of 2024, a 36% increase from the same period in 23. Average revenue per user was about $97, a 16% decrease compared to the fourth quarter of 23, primarily due to lower revenue per user for Jackpocket customers, lower actual. Expanded its sportsbook product offering into new jurisdictions. See, again, it may have been DraftKings, unless it was something like Roku, because I know they always look at, active users and how much they generate. I don't remember exactly the last time I may have spoken about this, but we spoke about the appeal and how increasing that market share could potentially benefit more than just kind of trying to squeeze every last dollar out of the customers and clients you may already have, right? So again, technically, oh yeah, it's a little bit lower than, what they spent per user this time last year. Yeah, but at the same time, the number of users coming in, almost 5 million, again, up 36% from the same time last year. So yeah, each user might be spending, 97 instead of 105 or whatever you were guiding for, but also there is a massive influx of new users coming in, and on average, all now adding $97 a piece on an average across the board. So the volume coming in, the appeal, the popularity of it, in my opinion, that's the value more than something like this. Oh, each person's spending less. It's, again, you don't need to have 500 per user. You need to have 500 people bring in more users, right? Through the referrals, and they do, the promo codes and whatnot, and that's what I mean. It seems to be working. Share repurchase. We're in a bunch of states. Guidance. All right, previous guidance was 6.2 to 6.6. Now we're 6.3 to 6.6. Okay. Reaffirmed its EBITDA guidance, 900 million to $1 billion. Does not include the benefit of year-to-date sport outcomes or the impact of mobile sports betting launched in Missouri. Only going to add to the situation, in my opinion. Need to maintain price target 60. All right, that's enough. Let's look at the chart. But again, technically going back from the all-time high there in 21, cutting down to the previous high there in end of March 2024. Recently touching, and now you can see we're breaking up and out. So that's why now technically we can get up to the top of this range right here, maybe about 56. And if it wants, it can even come to almost like that second top of those previous mountains. And that's why we can see maybe 60, 61. So in my opinion, they're probably more than likely going to push this to the high 50s, if not psychological level 60, 61, and then maybe potentially start to pull it back a little bit. My opinion. Because if we look at, again, some of the technicals here, you can see something like the RSI on the daily, almost 86, stock climbing. And again, we might continue maybe for like another day and then like a flash reject and readjust the RSI and then maybe bounce 2 days later or something. But you can see all previous pivot points here, 49, looking like about 50 and a half. We just completely jumped up and shattered through all of those. MACD pops almost straight up, beeline into the sky. And annoying ad. RSI on the weekly as well, you can see up here at 72 and a half. Right? So that's why we could at any time calm down, bring the RSI back down to earth, stock starts to drop down 7, 10, 15%, and then it has a massive surge bounce and climbs back up here to a previous pivot point of, 57 and a half, climbs up to this current year's top resistance level of 59.45. Very doable, in my opinion, very doable. And that's why, as we approach that level, that's why I feel Wall Street is going to just want to push it to that psychological 60 level, and then maybe they'll start calming it down, bringing it down maybe for a couple of their buddies maybe, so that they can step in and grab some shares before they take it off to the next level. Bollinger Bands real quick. And you can see, yeah, we started to get the tightening. We were bouncing nicely off the 50-day. We're going into earnings, and now, boom, we pop up and out of the Bollinger Band. So you can see we have that spike up and down, that trumpeting beginning. And that's why now we're probably going to curl it and slowly start to bring it up to those higher levels. It technically does still look bullish in a lot of the technicals, as long as you're not focusing on the RSI, which again is why I'm saying I think there's more room for growth there, but you might see a little pause here. Huge volume coming in. Look at that. Huge volume coming into DraftKings, helping to pump it up. Because again, people are seeing the growth. They're saying, okay, we just had a decent quarter, even though we missed. We're expecting an even better 2025. You know what? I'm going to jump in and buy this before it runs up to new highs of 60, previous highs of 70, 74. And, next thing you know, all of a sudden we're at 80, and you were looking at it down here in the 50s. $26 billion market cap. We're bringing in 1.4. Even if we extrapolate that, that's about 5.6 billion for the year. So yeah, you're trading a little less than 5x revenue right now. This is why I'm saying again, we can continue to pump, and then we might have the pullback to like even here, believe it or not. Retest that kind of all-time resistance trend line we just popped up above. Retest, bring it back down to earth, readjust the RSI, and then boom, pop it up even more. So some things like that could potentially be coming for DraftKings. But again, phenomenal outlook, phenomenal guidance going into 25, and congratulations to all shareholders of DraftKings. We even spoke about potentially jumping in calls going into earnings, so we had a bunch of people in like 50, 51 calls. Obviously, they made out like bandits today, so congratulations to everyone involved, and I'm going to end it there. So once again, Stocks by the Numbers, I want to thank you for stopping by. If you have any questions, comments, or concerns, drop it down in the comments section. I'm usually pretty quick to reply. Thumbs up algorithm helps me get more eyes on the channel. And of course, subscribe to the channel. That is our handshake agreement. That is how you help me help you. But more importantly, moving forward, like I always say, I understand that markets are rocky, they're volatile, and they're very uncertain. I want to wish all of you success. I hope everyone makes a couple of dollars. Thank you for your time. Have a good day.